Welcome back. You're watching Indian Open right here on Bloomberg Quint Live.
Quickly looking... Who's back? How was your holiday?
It was good, but I see that the markets have not done much since I've been busy.
Well, maybe now.
Yeah, hopefully the action comes back to the markets as well. But let's quickly take a look at what's been happening in Asia as a pack. So the SGX Nifty looks slightly more buoyant. You've got about 0.25% higher on the SGX Nifty, 11,783. Nikkei and Shanghai are not doing a whole lot much either. There's a slightly more flattish trade across Asia. For our markets, last week was a particular dampener, 3 straight weeks of losses. However, 11,600 touted to be the big support level that the index needs to maintain. It's the expiry week as well, so a lot riding on that in terms of volatility too.
Yeah, and let's see if indeed the currency or gold or etc. were to react quite strongly.
Crude oil
over the last few days.
Yes.
Yeah, and if indeed these sanctions on Iran bring about a further upsurge, that will not be great for India.
Yeah, and not for the equity markets either. But it's the derivatives expiry week for the month of June. Let's take a look at how the setup is as we step into trade this Monday morning. Agam Vakil is joining in with that. Agam, good morning.
Good morning, Devina. Well, what we saw last week was a little bit of weakness, and that weakness was very evident in Friday's trade. We did see about a little bit of unwinding on the Nifty, and as far as the Bank Nifty's futures are concerned, we did see actually an increase in open interest towards shorts. So, well, we're going to watch out for some of these cues as we move in. The wicks will come up for you. It's still not about the mark of 15, so we really aren't as concerned, though it is expiry, and we may very well see this variable higher. And of course, as far as your open interest change is concerned, a little more writing around the 11,800, 900, 12,000 calls. And well, as far as your open interest range is concerned, based on that, we're looking at 300-point range between 11,700 on the lower end and 12,000 on the higher end. Moving on to, your put call ratio, that has come off to a certain extent, but that's naturally because we saw the Nifty come off too at around 1.3 from 1.6. IDBI Bank, Jain Irrigation, along with Reliance Capital and Reliance Infra stay in the band. And of course, we do have Jet Airways, which moves back into the band. The final expiry week for Jet Airways in the F&O segment. Watch out for that. Of course, there is a lot of volatility in store. And as far as some of the other stocks are concerned, we can pull that up. We do have a lot of activity in Ujjivan Financial Services, Hindustan Zinc, as well as Piramal Enterprises. And in terms of some of the other counters, which actually did see a lot of movement, Sun TV, LIC Housing Finance, and Bharat Forge. We'll watch out for some of these companies. And of course, we're likely to see some more volatility coming through in the broader market specifically.
Right, Agam. Thanks very much for that. So that's the F&O wrap-up as we kickstart the expiry week. Bringing in Avinash Gorakshakar, Head of Research at Joindre Capital Services. He's joining us on the show right now. Avinash, 3 straight weeks, we've not really seen much of action on the index. We've seen some brutal cuts in some of the mid-tier names as well. What is it that you're watching out for in terms of specific stocks?
My guess is, I think, you're going to see a lot of action on the financial stocks, especially the PSU banks, corporate banks. I think because hopefully today, there are reports that the Bimal Jalan report is going to be announced. I think very importantly, what kind of money, the government could possibly get from RBI and what kind of spending the government makes. Because I think clearly, as everyone is aware, funding is a big constraint for the government. This report is definitely very important, and there are some stock specific names like RITES has announced a bonus, so possibly there could be some sort of spike. The stock has already moved up, but I think broadly you're going to see a lot of action on the financial side. I think clearly I would believe that corporate banks have also seen a lot of selling pressure, but hopefully with asset quality stress coming out from frontline banks like ICICI Bank, Axis Bank, you could see a lot of buying happening. And I think broadly, what happens on the oil crisis front, what kind of noises come from US, I think is going to actually drive the near-term, trend for the markets. But I think overall, my sense is, I think now the key event would be the budget. Hopefully, markets are expecting that some relief for stressed sectors like automobiles, auto components actually comes out, because, the news flow on ground is extremely weak. So I think unless they get some incentives and some sort of boost, I think we might see a little more weakness in those kind of cyclical sectors.
All right, IndusInd Bank in news, promoters looking to up their stake to about 15% by warrant issues. But the fact that the stock is actually seen steep cuts from where it was earlier on to about 1600, from 1600 to about 1450 where it is now. What would you do with this stock?
No, I think, Devina, if you leave out the ILFS exposure, I think operationally, the bank has done well. I think now the merger of Bharat Financial has more or less been finalized. So I think Bharat Financial obviously gets better margins considering that it operates in the microfinance space. I would believe that, any weakness should be used as an opportunity. I would not be surprised that unlike maybe a Yes Bank, IndusInd Bank definitely has its financials in a much better shape. I would not be surprised that if you leave out the ILFS exposure, not much of asset quality issues could be seen outside that pocket. And I think the management made it clear. Excluding ILFS, numbers have been pretty decent. And I think the markets have factored in the fact that now at least for the next 2-3 quarters, there could be a provisioning, which will be made for ILFS. So I think excluding ILFS, they have done well. But I think going forward, it's going to be, a slow kind of uptrend. The stock has been beaten down because fears of more small exposure, apart from ILFS could come in. But I think these are fears which have been built in by the markets. So I think it's definitely a stock to look at from a longer term perspective.
I have a question, follow up to that, Avinash. Would you rather look at IndusInd Bank, or would you opt for an Axis or an ICICI Bank? No such issues, no succession issues, because unlike IndusInd Bank, which has got a succession issue coming up in FY20, these guys have got the new men at the helm. Would you rather choose them over IndusInd Bank?
I think Axis definitely would look much better, considering the fact that the outgoing CEO, before she went, I think she ensured that the entire asset quality stress was removed from the balance sheet. And I think the new CEO who has come in, I think has already put in a kind of a very strong plan. By FY22, they are looking at a ROE of almost 14-15 odd %. So I would believe, Neeraj, you are right. I think Axis Bank definitely qualifies as a much better bet if you compare it to IndusInd Bank. And I think given the choice, I think if you have a limited resource pool, I think Axis would definitely qualify as a first pick, and probably IndusInd Bank may not immediately rise. I think, as you rightly said, there is a succession issue there. In case of Axis, I think that has already been successfully handled. And I think if you look at the balance sheet for Axis Bank, both retail as well as corporate is going to grow faster.
All right, got that. Lots more to talk to you, Avinash, and get in your views on specific stocks. But in the meantime, let's go across to our research team. They're standing by to highlight all the stocks that are there in the news that could or could not see stock price reactions in the morning, and some brokerage calls that have come in over the weekend. Sumit highlights that for us. But let's start off with Mishka first and the stocks in news.
Yeah, so the first stock we're looking at is IndusInd Bank. The promoters will pump in another 2,700 crore rupees into the bank through a warrants issue to ramp up the promoters' holdings after the merger of Bharat Financial Inclusion, as reported by PTI. And money is being infused to get their stake back up to 15%. A fourth of the money will come in immediately after the merger, while the rest will come over the next 18 months. Then we have Jain Irrigation. Fitch has downgraded the long-term issuer default rating to B- from B+ and placed on rating watch negative due to weak operating performance, a stretched balance sheet, and aggressive growth pursued by the management. Then we have Glenmark. US FDA has issued a complete response letter regarding the new drug application for Ryaltris. The CRL cites deficiencies in the drug master file pertaining to one of the active pharmaceutical ingredients and in the manufacturing facilities. Glenmark says that the CRL does not specify any deficiencies with the clinical data supporting the new drug application for Ryaltris, and the company sees a resolution in the next 6 to 9 months. We also have Reliance Infra. India Ratings and Research downgrades long and short-term credit rating to default, and the downgrade is due to ongoing delays in debt servicing and non-cooperation from the issuer. Dr. Reddy's has been issued Form 483 with 2 observations for the Vizag SEZ Plant 1 and Plant 2 at Duvara. And lastly, we have BAIL. They will make emission control equipment for NTPC unit in a deal worth 840 crores. With this order, the company is presently executing flue gas desulfurization systems for 23 units of NTPC and its joint ventures.
Right, Mishka, thanks very much for that. So a whole list of stocks there. What's happening on the brokerage front, Sumit?
Well, a couple of them. The first one is on Lupin, where Credit Suisse has upgraded its rating on the stock to outperform from an underperform rating and have hiked the target price to 860 from 800. Now, according to the brokerage, concerns on Solosec ramp-up and margin contractions have already played out on the share price of the company. Now, though Lupin has turned a net debt company in the past 4 years due to weak acquisitions and low free cash flow, this is about to change according to the brokerage. Now, the brokerage is expecting a sharp turnaround in its free cash flow going forward, forward and is expecting the company to turn close to debt-free company by FY23. Now, along with this, the launches of 2 key products in Europe and US will also help the company, says the brokerage. Now, the brokerage is saying that these 2 key products will add nearly 56 rupees per share value to its total value, which is currently ignored by the market. The second one is SBI Life, where Morgan Stanley has initiated coverage with an overweight rating and a target price of 850. Now, according to the brokerage, SBI Life benefits from parents' large customer base and branch network. Now, on the back of this, the brokerage is expecting SBI Life's premium to grow at a CAGR of nearly 17% over FY19 to FY21. However, it says that since listing, if you see, the stock price has underperformed due to an underperformance seen in the protection business of the company. However, going forward, as the protection business is improving, it will lead to sustained margin expansion for the life insurer, says the brokerage. Now, along with this, going forward, improving operating metrics will help the company maintain its valuations, while the increasing or the growing value in the new business will drive the strong stock returns, says the brokerage.
All right, guys, thanks very much for that. So a whole host of stocks that you need to keep in mind. Avinash, I want to pick up Jain Irrigation from the stock that Mishka highlighted in the stocks and news, and the issue with regards to Fitch downgrade coming in and the reasons that they've highlighted for the same. You've got a stressed leverage position, balance sheet seems to be a bit stretched. Do you think the stock is better out than in?
My guess is I think Jain Irrigation's problems have actually got compounded over the last 2 to 3 quarters, and I think the markets are not very happy to know that the pledging from the promoters has continuously increased quarter on quarter. And I think looking at the kind of debt on the balance sheet, the working capital stress in the business, I would not be surprised that this is definitely going to lead to a lot of outflow on the stock. I think a lot of institutional investors are now completely out, and I think if the management is not able to bring down the pledging factor here down significantly in a short time, possibly you could see a further rundown on the stock. I think I wouldn't be surprised that operationally numbers are going to remain weak, at least for the next 3 to 6 months.
Okay. Well, let's wait and watch what happens to Jain Irrigation. Let's wait and watch what happens to ADAG. As we said, I think if you look at last week's charts, there was a bit of a bounce that came in, short covering led bounce, and then it stayed true. So Wednesday, there's a bit of short covering. Thursday, the stock stayed okay. There, the chart suggests that. And then a bit of a flattish move. The question mark only is, can these stocks decline in the expiry week? I think that's the big question to monitor. Let's get in our experts to talk about that and more. Brijesh Bhatia, Head of Research at Dealmoney Securities, joins us on the show, as does Ruchit Jain, Technical Analyst and Angel Broking. Gentlemen, both of you, good morning. Thanks for joining in. Brijesh, quite a spectacular call yesterday when the markets were going off and you recommended a buy on the index. It behaved very well post that. The question is, in this expiry week, not just for today, but for the near term, what's the call? The next 4 days, what do you expect the index to do?
Hi Neeraj, good morning and thanks for the call appreciation. I think we are heading for another, again, 200 pointer upside. Possibly we are looking expiry between 11,850, 11,900. I think there might be a slight dip of around 40-50 points in the today's session in the first half. Probably look to long around 11,675, 11,690 spot. And that could be for a couple of reasons. First is if you look at the derivative structure, 11,700 put stands out to be a highest OI, might act as a support. Second, if you look at the technical parameters, we have been taking strong supports at the gap, and multiple bottoms have been formed around 11,600 zone. Plus, if you look at the short-term charts, we are possible from form a reciprocal AB equal to CD harmonic pattern, which turns out to be at 11,675. So probably we are expecting a reversal around those levels and look for around 11,826, 11,813 short-term, and probably in the next 4 days, expiry could be around 11,850, 11,900 on the upside.
Okay. Ruchit, what's your call on the index? Good morning.
Yeah, hi, very good morning, Neeraj, and very good morning to everyone. During last week, we had seen that the markets have formed a support base around this 11,625 mark, which was the 50% retracement of the previous up move. On Thursday's trading session, that is when the weekly expiry was there, we had seen a sharp up move in the indices from that lower levels. And on Friday, although we had seen a minor decline, but I think the support base has been formed now around 11,625. And also, if we look at some of the options data, then that is hinting at some positive biasness, because 11,700 put options have witnessed decent writing, and on the higher side, the highest call option, the highest open interest amongst the call option is placed around 12,000. So I think for this expiry week, the broad range could be 11,700 to 12,000 range. So that is why we are advising our clients to create fresh long positions at current levels, since the downside seems to be very limited. So Nifty futures can be bought with stop loss below 11,620. I'm giving the spot levels. Accordingly, one can trade in the future segment. Stop loss should be 11,620 and on a spot basis, and target would be 11,850 before expiry.
Okay. Got that. This is the calls coming in on the index, but we have a few stock-specific ideas as well from both our technical experts. We'll start off with you, Brijesh. Interesting ideas, SRF and Narayana Hrudayalaya. Why do you like these two stocks?
So let's start with SRF. So if you look at the SRF, we have seen a good upside momentum. In the last week, the all-time high was being retested at around 2937, and we saw weekly close about 3000, which was a key psychological level. So at 302021, one can look for long, keeping a stop loss of 2970, and looking for targets of around 3140 to 3200 on the upside. And the second is Narayana Hrudayalaya. So if you look at the stock has given a strong momentum, closing above the 230 levels, which was not quite visible in last 5-6 trading sessions. Stock managed to surpass those levels, but it was ending around 226, 225 sort of zones. So on a weekly close about 230, it's giving a good breakout level, and one can look for long in the momentum base, keeping a target of 249 to 265 on the upside, and stop loss would be 225. This call would be slightly for 1 week because the stock is slightly slow mover.
Okay. Ruchit, two ideas from you as well. Vedanta one, and the other one is Dr. Lal Pathlabs.
So if we start with Vedanta, then last couple of months the stock has consolidated in a range of 172 to 155 on the lower side. Last few trading sessions there have been indications of probability of a breakout above that 172. Firstly, if we see on the Friday's trading session, the prices managed to give a decent close near that breakout level, and in option segment 170 call option have witnessed unwinding. So we are expecting some good short covering move in Vedanta in next few trading sessions. So one can buy Vedanta with stop loss below 167.90, expecting near-term target of 183. And Dr. Lalpath Labs, if we look at this stock, then in spite of all the corrective moves that we have seen in the broader markets in the mid-cap segment, this stock has managed to show some good outperformance, and the prices are trading at its 52, almost near its 52-week high. A broad consolidation phase was there for last 5 or 6 months, and during last week we have seen a breakout of that consolidation phase. So we are expecting a continuation of the uptrend. So Lalpath Labs can be bought with stop below 1065, expecting target projections around 1300 to 1310.
Okay. Those are some stock ideas that you can keep in mind. But onto a special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, what's the stock on the radar today?
Morning, Devina. So we're looking at Aavas Financiers on the charts, and there's a bearish engulfing pattern seen forming on the daily time frame. But before we get ahead, let's first try and understand what the bearish engulfing pattern is and how do you interpret it. It is basically the formation of a large red candle wherein the body of the red candle completely engulfs the one ahead of it. The higher or the larger is the size of the second candle, the higher is the evidence of a top forming, with no further confirmation needed over there. Coming back to the price chart of Aavas Financiers, what we saw in yesterday's on Friday's day of trade is the fact that the stock managed to fall close to 3%, which was its highest fall on a closing basis in over a month. The volumes too were fairly high as compared to the 30-day average, and with that, as you could see, the red dotted line over here, that is the mark of 1500. Thrice it has managed to come to these levels, but it has not been able to cross it substantially. In fact, even able to cross it on a closing basis, and we saw that big fall in Friday's day of trade. So the risk to reward ratio is favorable, and with the bearish engulfing pattern forming at these higher levels, it indicates that there is some amount of weakness, and there could be a slight bit of a correction because the stock is not a very big as far as volumes are concerned. So it will give a small bit of a correction and then could resume its rally on the upside. So from here, it looks like there could be some amount of weakness coming in on Aavas Financiers.
How well has this worked in the past, Yash?
So Devina, 3 out of the last 6 times that the bearish engulfing pattern has been formed on the daily time frame, the stock on an average over the next 1 month period has fallen close to 7%. So 7% from its Friday's closing comes around 1350 or 1341, which is also where the 50-day moving average is for the stock. So it would take support around those levels. Shouldn't manage to break below them, we could look at targets in excess of 10% from here on.
Okay. Yash, thanks so much for putting that into perspective. So do watch out for Aavas Financiers. He spoke about how financials would be in focus today. Actually, just one more follow-up question on financials, Avinash. Ujjivan and Equitas, big cracks in Friday's session. Now, there's this whole talk going around, right, about the holding company for Ujjivan and whether the existing shareholders get a pie of that, etc., etc. RBI may not allow. We do not know the details as yet, but there's nervousness on the street.
Yeah.
What's your gut feel? What would you do at a current point of time in Ujjivan, particularly?
No, I think Neeraj, clearly, looking at this factor, maybe in the near term, the business could possibly, the sentiment on the stocks could be negative. But if you look at the core microfinance business, I would believe that both Ujjivan as well as Equitas have shown pretty strong numbers in the previous fourth quarter. And I think, momentum going forward is going to be pretty solid. So I think clearly, if one were to take a short-term call, I would definitely not look at buying it. But longer term, I would be more confident on Ujjivan and Equitas, considering the fact that the core microfinance business is going to do well. In fact, Ujjivan had reported a very robust fourth quarter. Management commentary was also very positive. So I would believe that maybe in the near term, because of this uncertainty on what kind of guidelines RBI comes out with. But overall, I think the core business should grow. So I think I would definitely be a buyer, if I were to choose a microfinance kind of stock.
No, but I have a small follow-up there, Avinash. If indeed there is this holding company discount that comes into play, then yes, it might grow in the long term, but in the short term, the valuations might correct, right?
Yeah, short term, I think it's definitely going to correct.
Because wait for the time being?
Yeah, it would be better to wait. I think because this is definitely a factor which is going to obviously impact short-term valuation, Dheeraj.
Okay. The other thing, Avinash, in Friday's session, we again saw autos come under pressure. Maruti, etc., all of them were under stress. My question is more from an auto ancillary perspective now. What do you do with a stock like Motherson Sumi, for example? Global vendor, large player. Ahead of the G20 summit, yes, there'll be focus on trade war, but if all goes well, would you take an exposure at these valuations if you're a long-term shareholder in a Motherson Sumi?
I think if you've got a 2-year plus kind of horizon, Motherson, despite the fact that it's a fairly leveraged play, it has got a large exposure to Europe, and hopefully, if the global headwinds, become a little positive, I would believe that Motherson definitely has enough propensity to actually bounce back from these levels. I would believe, most of the negatives are into the price, and everybody on the street is factoring in a very weak domestic kind of, top line, especially from domestic vendors. So clearly, I think if somebody has a 2-year call, I think one could start nimbling. But yes, in the near term, Neeraj, don't expect any major revival on the numbers, because like the previous quarter, this quarter could see possibly a YOY decline. And management commentary has clearly indicated that next 2 to 3 quarters are going to be challenging.
All right. The other one is Yes Bank. For the first time in 5 years, you actually saw Yes Bank go into double digits and come back up. At 109, the management, the new head, Mr. Ravneet Gill, is actually pretty confident that the bank will re-rate by the next quarter in some of his commentaries that he's made. Do you think that could happen and that there's nothing fundamentally wrong? His words, that there's nothing fundamentally wrong with business. There were some issues and it was a reset phase in quarter 4, and that will change come the next quarter.
I think everything revolves around the fact that, out of the entire loan book, Devina, what kind of bad assets have been provisioned. I think there is a 10,000 crore watch list as of now. I think the market is hopeful that, beyond 10,000, there are not many bad assets. So I think, if these assets don't, the number does not increase, then I think you could see some sort of recovery. But I think to give a assessment that within 3 to 6 months, there could be a complete, turnaround, I think it would be a little difficult statement to, get digested. So I would prefer to wait and watch. I would believe that, things are not completely clear. And I think there is definitely a lot of stress on Yes Bank. I think how they are able to recover money is going to be very crucial. And I think clearly, growth numbers which we saw in the last 3 to 4 years, despite other banks underperforming, Yes Bank used to report very strong numbers. So I think you're going to see overall growth momentum also getting slowed down, because obviously risk control is going to now be the core, focus area for Yes Bank. So I would believe it's better to wait for the June and September quarter, get some clarity and then jump in. And I think they also require a lot of capital. So, at this price, if they were to dilute, I think I wouldn't be surprised that would actually not help the book value to grow. So I think it's better to wait and watch.
Okay, but with regards to a trader and someone who wants to take a position on Yes Bank, Ruchit, at about 109, would you see a meaningful bounce in this stock?
See, although the broader trend has been positive, but there have been some signs of a pullback move during last couple of trading sessions. Firstly, in Thursday's trading session, the stock has formed a bullish engulfing pattern on the daily chart, and also there has been some divergence in the positive divergence in RSI. In May 2000, on 17th May, when the stock had formed a low of around 130, the RSI was trading at levels of around 19 to 20, and now during last week when the stock had formed a low of 99, which is lower than the May's low, the RSI has formed a higher low around 33. So, which in technical terms, usually whenever such divergences are seen in RSI, the stock tends to give a pullback move. So I think there could be a pullback move towards 127, 130. So if one is looking just from a trading perspective, then one can create fresh long positions around Friday's closing, but keeping a strict stop loss below 98 rupees, which would be the Thursday's low, and expect a pullback move towards 127 to 130.
A couple of stocks in news, Avinash, just very quickly. Two big issues, Glenmark and Dr. Reddy's, both. The US FDA has issued the complete response letter to Glenmark and Form 483 for Dr. Reddy's Duvada and Vizag plants. Big news, or
I think what kind of observations come out, Neeraj, are important. I think in case of Dr. Reddy, the Form 483 has given, I think, 3 to 4 observations. So I think how serious these observations are, I think the markets would obviously like. If these are routine observations, I don't think they're going to have any impact. But if at all there are some serious issues, then I think you could see a little bit of a softening trend. I think in any case, these stocks are going to be not showing any immediate kind of upside. I think the markets would obviously also like to get a clearer picture on what kind of news flow comes from these observations. So I think as of now, I would not be surprised. You wouldn't see any major panic here. But yes, overall, pharma has been a weak kind of spot. Both domestic as well as global players have seen, their margins coming under pressure. So I wouldn't be surprised. Not much activity could be seen here.
Okay. About 44 seconds left to go for market pre-open. Going to watch out for the currency as well and what happens thereabout. It's been comfortably placed around the 69.5 mark that we've been seeing. But with regards to the geopolitical issues that have been weighing down on crude oil prices, whether or not that has its negative implications on the currency as well is something that remains to be seen. 24 seconds left to go. We are also going to be watching out closely for some of the stocks that we discussed, like Jain Irrigation. You're going to watch out for IndianOpen Bank and what happens to stock when it opens up for trade. Asia is a pocket though, holding on to early morning gains. Not much though, just 0.25% higher for Shanghai and Hang Seng, and Nikkei just about flat. SGX Nifty maintaining a 14-point head start, so that's about 11,768. Market pre-open, Nifty 50 and Sensex both open in the green, but very volatile, so won't really go by these initial few ticks on the indices. Taking a look at individual stocks then and what's happening thereabouts. So IndianOpen Bank, your first tick obviously is a 10% uptick that you've been seeing on the back of the fact that the promoters are looking to up their stake to about 15% via that warrants issue. 1706 is the price that has been spoken about, which is probably something that could lead to an upside from the current market price that we've been seeing. Yes Bank, some respite, 110 there. You've got HDFC Limited, Larsen and Toubro up 1% apiece. Z has moved up about 0.5%, 347 on the stock. ONGC, Britannia, and some of the other names like SBI, ITC, no meaningful gains as such, just 0.25% or so. Losers, Reliance Industries down about 2% odd. Ultratech Cement is down 1.5% odd. We'll wait for a few more seconds till we get a clearer picture on the currency and the bond market yields.
Yeah, no big reactions as yet, at least on the rupee. The bond yields will come out a bit, 69.61 amidst all those reports about surrounding Viral Acharya. Unconfirmed, of course, but let's wait and watch. Let's stick to specific stocks. Jet Airways, last week of being in the F&O space, was up 15% in Friday's session as well. For now, 10% lower. Let's wait and watch. And the ADAG Group stock still in the F&O ban, but let's see if there is a reaction thereof on Infra and Capital. Those are the two names that matter. 3% down, Reliance Infra about 4% down. I doubt that Glenmark or Dr. Reddy's will be showing dramatic reactions. Let's wait and watch what's happening there too. And Jain Irrigation is the other one. But yeah, flattish moves for Dr. Reddy's. Jain Irrigation after a bit of a pop late last week, down about 3%. Looks like we'll be down 3%. Let's wait and watch what happens there. Anyways, I will get to more in just moments from now. A couple of other things. Since we're on the topic of Jet Airways, Ruchit, Jen, Jet Airways, Indian Hotels, some of these travel and tourism related stocks, how do the charts look? They're different, of course, companies completely different, but these two charts, Indian Hotels and Jet Airways.
Jain Airways, frankly, Neeraj, it has been very difficult to now predict anything in this stock. No, although the broader trend has been negative, which we have been speaking about last many months now. But the kind of volatile movement the stock has shown during last week, at least from a trading perspective, even if you keep a stop loss of around 5 to 10% and take any position, there's no guarantee that the stock would not hit in next few minutes. So I think from a trading perspective, one should clearly avoid taking any kind of fresh trade in Jain Airways. Yes, if we come on to Indian hotels, the broader trend for Indian hotels has been positive. We have been witnessing a high top, high bottom structure on the weekly chart. Last 2 months, there has been a consolidation phase where prices have remained sideways, but this consolidation just seemed to be a time-wise correction within an uptrend. So if one has to take any perspective of next 6 months, I think Indian hotels could do levels of around 175, 180 in next 6 months. So one can certainly create fresh long positions in Indian hotels, keeping stock below 138 for target around 175 in 6 months perspective.
Okay. Big reactions on Tata Sponge Iron, big reactions on Jain Irrigation and the ADAG group stocks. So the weaker hands look like they will get weaker. No big winners in the session as of now. The top 4 or 5 names are all the Suzlon quality variety. Let's wait and let's give them a chance to stabilize before we talk more. Maybe just talk about the index stocks. The Nifty 500 is peppered with gainers and losses to companies which are under a bit of a cloud. Anyways, IndiaSind Bank too, by the way, settled down. Part of 1.5% uptick in the first 3 minutes. Let's wait and watch. While we talk about the secondary markets, primary markets important to monitor as well. India's largest online B2B marketplace, IndiaMart's IPO opens for subscription today. The promoter will be offloading their stake via an offer for sale. Sumit Sarkar is here to take us to the details of the company. Sumit, good morning.
Good morning, Neeraj. So if you see, the company is looking to raise close to 476 crore rupees by issuing nearly 49 lakh shares at a price band of 970 to 973. And now at the upper end of the price band, that is 973, the company will be valued at close to 2,800 crore rupees. So what is IndiaMart? IndiaMart is India's largest online B2B marketplace with around 60% market share. Now it is an aggregator for suppliers and buyers, and its revenue model or its business model works on subscription from sellers or suppliers who opt for paying and not from buyers. Now on the seller side, if you see, it caters to nearly 54 industries with nearly 9% of its suppliers belonging to the construction industry, 8% to clothing, nearly 7% belonging to vegetables, fruits and other FMCG product, and 3% of close to automobiles, pharma and other consumer electronic products. Now it has a pan-India presence with nearly half of its suppliers concentrated in 8 metro cities. The tier 2 and tier 3 cities suppliers account for nearly 27% and 13%, while the remaining 11% come in from other cities. Now if you see the key performance indicators for IndiaMart, it has seen a good growth in its registered buyer to around 83 million by FY19 from close to 27 million in FY16. Also, its paying suppliers have increased to close to 1,30,000 from 72,000 in FY16. However, paying suppliers as a percentage of total supplier base of the company still remains low as of FY19. As you can see, it has nearly 5.5 million total suppliers, of which only 1,30,000 are paying suppliers.
All right, and what about the financials and the valuation, Sumit?
Now, if you see the company's revenue, it has grown at a CAGR of nearly 30% from FY14 to FY19. But as you can see in the chart, the company has turned operationally profit only in FY18. It did an EBITDA of nearly 47 crore rupees, while in FY19 it did an EBITDA of close to 82 crore rupees. Now, this operational profitability for the company was on the back of higher revenues and stable costs. Now, higher revenues was aided by more number of paying suppliers for the company. But on the cost side, if you see, the company's employee cost as a percentage of the revenue, now that has come down drastically to clearly 47.5% in FY18 from 66% in FY17, which aided the company to turn profitable. And FY19 also, the total employee cost as a percentage of revenue was lower at around 45%. Along with this, a lower advertising cost, content cost and outsourced supplier cost also aided the company's profitability. As you can see, the advertising cost came down to as low as 0.4% as a percentage of revenue, which aided the company to turn profitable. Now, along with that, if you see, the company sells nearly 1/3 of its subscription on a multi-year basis, that is nearly 3-year basis. So deferred revenue is a good indicator which will give us an idea of how the near-term revenue growth of the company will be. As you can see, from FY14 to FY19, the company's deferred revenue or advances from customer has increased to 586 crore rupees from 122 crore rupees. So there's a good growth coming in from the deferred revenue, which shows that the near-term revenue for the company will be good because in FY19 the deferred revenue was close to 590 crore rupees for the company. Now, if you see on the competition side, it has no listed peer in India, but on the unlisted side, it has Trade India and Alibaba India, which are the direct competition for the company. On the indirect side, there are search engines like Just Dial, Google, and any other search engine which pose as an indirect competition for the company, while on the traditional channels, there is trade show organizers, trade magazines, yellow pages, and advertisement, which also come as a competition for the company currently. Now, on the valuation side, if you see on an FY19 basis, according to our calculation, the price to earnings for the company is 140 times market cap to sales, and EV to EBITDA, which are the more appropriate valuation metric to check for India Mart, stands at close to 5.5 times and 25.7 times. Now, according to a note of Haitang Securities, where they're expecting the company's revenue growth to be around 20% and margins to be around 17% in FY21, the EV to EBITDA on the issue price of 973 stands at close to 17 times.
All right, Samit, thanks very much for that. Avinash, would this IPO interest you?
My guess is, I think, this B2B play is a unique company, and I think clearly this IPO, Devina, is largely to, let the angel investors and PE investors actually exit out. So we have been telling our clients to actually wait for some time rather than, applying for this issue. It would be better that, let the market discover the price of the stock and probably, look at 1 or 2 quarters, because these kind of businesses, our sense is that, valuations definitely don't look cheap. And I think despite the fact that they have some uniqueness in their business model, any initial IPO kind of gains, from these levels looks a pretty difficult job. So I would, say if at all one were to look at this company, it would be better, once the stock gets listed.
Okay. As the pre-open rates have settled down, do watch out. Tata Sponge is X, right? So that's what you got to keep in mind when you're looking at the stock. Don't look at this 12% downtick as a news-based specific move. Jet Airways looks like starting off 10% lower. There is weakness in ADAG, as we've been talking about. TVS Motors is looking like starting off weak, about a couple of percentage points. So do watch out for that one as well in the session today. And Lupin looks like starting off positively after the brokerage upgrade that has come in. Brijesh, Bhatia, any thoughts on Lupin?
I think stock is quite strongly making a bottom for quite some time, and I think maybe another month or so where Lupin might form a bottom, and then I think from August or September one should look at Lupin, and we are expecting around 30-35% upside from here on as well. So let the stock make bottom for another 1 month and then look for long opportunities.
Okay, that's Lupin for you at 731. Well, we're just minutes away from market opening, and we tell you all that you need to know to stay ahead in trade today. IndianOpen Bank promoters will pump another 2,700 crores through a warrant issue to ramp up promoter holding after the merger with Bharat Financial.
Jain Irrigation's long-term issuer rating has been downgraded by Fitch. The outlook is now watch negative due to weak operating performance, stretched balance sheet, and aggressive growth pursued by the management. The stock likely to start off 2 percentage points lower.
US FDA has issued a complete response letter for Glenmark's nasal spray named Ryaltris. The letter cites deficiencies in the Drug Master File, which is a document containing all the information about the drug submitted for approval.
BHEL wins an order from NTPC worth 840 crore rupees for emission control equipment.
And lastly, HDL promoter Sarang Vadavan raises stake in company from 8.6% to 12.5% via warrant conversion.
That's an interesting move. I must say, as the pre-open it settled down, the stock that starts off the best is IndianOpen Bank, another 2.5%, 1483. So from a low of 1365 last week, it's over 115-point uptick for IndianOpen Bank. I know we took a chart check before the market started, but Brijesh, if I can come to you back on IndianOpen Bank at 1483 for somebody who's seen the news, is it, if one was long, is it prudent to stay long, or would you take the profits?
I think still the worst is not over for IndianOpen for me on chart. So I think we are expecting around 1200 levels. So in case you see around 1530, 1520, we might see a slight upside of around 70-80 points in maybe 1 or 2 days. But that would be again for short opportunity for me. Till the time stock is not closing over 1620, I think 1200 door is open for 1200 levels on the downside on IndianOpen, and I would look for a short opportunity on the rise.
That is IndianOpen Bank, so probably a further downside anticipated by Brijesh. The other one that we could probably look at is something from the auto pocket, and Maruti now at 6,400 odd. It's not seen that big a blade, but this has been the typical range and this typical bottom for Maruti from where it starts to pick up. Ruchit, would you go long on Maruti at these levels?
I think last 4-5 months the stock has frequently came in this range of 6,450, 6,400, and again has given a bounce back from those levels. Although this is a good support base, but the kind of follow-up buying has been missing since last few months. So I think one should wait for a follow-up buying to emerge either in Maruti or in the entire auto sector as a whole. So I would take fresh long positions only now if I get a breakout above its 20 days exponential moving average, which is placed around 67.70, 67.80. So I won't advise creating fresh longs at current levels, but in case if again it forms a support base over here and gives a breakout above 67.80, then one can look to enter this stock.
Okay, we'll watch out for that. Avinash, one idea from your end, something that you are putting fresh money to work in right now?
I think within the private sector banks, we like Federal Bank. I think Federal Bank is one of those banks, Neeraj, where management has clearly hinted that over the next 2 years, their ROA as well as ROE is going to increase significantly. In fact, just few weeks back, the management has raised some bonds worth about 650 odd crores. So I would believe, their capital adequacy levels, their asset quality levels have been pretty decent. I think hopefully if we have a better ROA and a better ROE going forward, I would not be surprised that you could see a decent re-rating here. We have got a lot of institutional as well as a lot of HNI investors who have invested here. And looking at the fact that, now the Kerala floods issue are now a thing of the past. ILFS issue has also been provided. So I would believe that, at these levels, one could possibly take a punt. I would not be surprised we could see levels of 130, 140 over the next 6-12 months.
Okay, that's Federal Bank for you at 102, so 130, 140 is where Avinash expects it to be at. Thanks very much, Avinash, for joining and appreciate your time. 1 minute left to go for market opening, and let's quickly get in our top trading calls from our technical experts. Ruchit, let's start off with you first.
I would advise buying Container Corp. The stock has given a breakout in last couple of trading sessions and is now indicating a gap up opening today. So I think the stock should resume its high degree uptrend. One can buy with stop below 542, expecting target around 580.
Okay, Brijesh, what about you?
Yeah, apart from long on SRF and NH, I would look for long on JK Cement. So if you look at the stock has given a strong rally, forming a flag formation, and I think 1082 one can look for the targets on the upside, keeping a stop loss of 995.
Okay, Jain, thanks so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time, Brijesh as well as Ruchit. The market's not looking like they'll start off with any dramatic movement today. The indices seem to be indicating or rather indicating a flat start. The question mark is, during the course of the day, could there be gyrations in the markets, in the rupee and the other asset classes? Let's wait and watch. But a flat start, completely flat start. It's a bit of a lackluster trading move, a start to the trading day today. I doubt that the mid caps and the small caps will be doing something dramatically different. So after that big 1% downtick in Friday's session, and the world markets will be rather flat too. Indian markets have started off absolutely flat. Small caps maybe have a hint of movement. The large caps and the mid caps completely flat. Let's bring up individual indices and let's see what's happening. Or rather first, the individual companies, the heat map, and even Stevens of sorts. Not too many losers, neither too many gainers. IndianOpen Bank, the principal mover, up about 2%. There is some strength in Yes Bank today, up about 1%. Not too many other banks, I reckon, within the top gainers list. ICICI Bank maybe 0.5%, but nothing too dramatic. Larsen & Toubro has a 1% uptick, UPL 1% uptick, Coal India about 0.5%. That's the nature of the gainers today. Maruti Suzuki is flat after the 3% downtick, and Bajaj Finance too is very, very flat. Titan 0.5% higher. What's not done well? Well, Tech Mahindra is down about 1%, nearly 1%. Do I see other IT names? No, not quite. Actually, Tech Mahindra is a lone ranger of sorts on the downside. Reliance starts off 0.5% lower. Bajaj Auto 0.5% lower. Wipro maybe, marginally off, just about 0.1%. So, Tech Mahindra is a bit of an individual mover. Dr. Reddy's corrects a bit, about 1%, on that news flow that has come in. But no big gainers. The Sensex and the Nifty 0.2% in the green. A couple of pockets of strength or weakness that I want to highlight at the broader end of the spectrum before I hand it over to Devina. Firstly, companies that have been amongst the top losers in Friday's session, Ujjivan and Equitas on the NSE 500. These two stood out. Ujjivan still corrects further, so 294 and counting. Equitas recoups a bit of losses. There's some announcements that are expected, at least the street seems to be believing that, and therefore watch out for these stocks in the session today as well. Jet Airways, and let's see what that is doing in the session today. Big mover, it's back in the F&O ban, about 6.5% lower, but nothing too dramatic, nothing quite to the kind of movement that we saw in Thursday's session on Jet Airways. Devina, what are you spotting?
Start with Jain Irrigation first off, and the Fitch downgrade on its long-term issuer rating. So you've got the stock down about 2.5%. Max Life is the other one. The Radiant Life has completed its purchase, so you've got that up about 1.6%. You look at SBI Life also. Morgan Stanley report on that, a positive report coming in on that. Stock's up about 1%. Glenmark, US FDA has issued a complete response letter, and the stock is trading under by about 1.5%. Other movers in trade, Month% Beverages is up about 5%. You've got Abano Offshore, which is up about 4.5%. JBF is up 4.8%. The likes of a J&K Bank, 3.5% higher. Lakshmi Vilas Bank is also up in the session. Lupin has moved up about 2.25%. Then you've got the likes of Vakrangi, Piramal Enterprises, Info Edge doing okay for itself, and PC Jewelers also up about 2% in trade. Just looking at some of the bigger losers then, and Tata Sponge Iron is down 12.5%. I think probably there's some adjustment here.
That's right, yeah.
Yeah. Eros International is down about 4.9%. Reliance Infra, Reliance Capital, both these stocks taking heavy knocks last week, and the pain continues for these stocks in today's session as well. Imami, Hexaware, Gujarat Gas, all down about 2.5% to about 3% apiece.
Well, let's get in a special market voice. Saurabh Mukherjea, founder of Marcellus Investment Managers, joins us right now on the show with his thoughts. Saurabh, good having you. It's been a while. Thanks so much for joining in. Neeraj here, good morning. What's your sense? What's your sense, Saurabh? I mean, what would you be doing currently? How do you think the near term is shaping up? Because one, we have the big budget day a couple of weeks from now, but the G20 in the next 7 days, geopolitical tensions between US and Iran flaring up as well. How do you approach investing in such a scenario?
I think Neeraj, it's par for the course really. I mean, 6-7 months ago we had US and Korea and we had elections coming up. So there's always going to be a bunch of macro issues. I don't think investing in India is any different today than it was 6 months ago or 2 years ago or 10 years ago. Continue buying high quality companies, great cash flows, great franchises, what I call in my book Coffee Can Investing, what I call stocks where you can get 10x in 10 years with relatively low volatility. Specifically, I think the main concern most of us have at this juncture is not really the budget. I don't think the budget's going to be that much of a blockbuster. I think most of the action was preempted by the 1st February budget. So the fiscal headroom is limited, and the budget earlier this year, most of the fireworks took place there. I think the main concern at this juncture is the sort of triple whammy we are dealing with, which is real estate is struggling, the lenders to real estate and to the auto sector, NBFCs and HFCs are struggling, and the debt mutual funds who financed NBFCs and promoter funding vehicles and real estate, the debt mutual funds are obviously reluctant to extend any more money to these sectors, and at the core of the economy, that's dragging down economic growth, as is evident from the data on the auto sector or the data on the real estate sector. I think that's the triangle we all need to be a little careful of, because you can see that the shock waves from that are moving outwards. Channel financing more generally has become a problem, and that's dragging down growth elsewhere in the economy. But there is always bound to be one or two macro issues in a large economy like India. And as long as you continue investing in fundamentally sound companies, you should be all right. Our compounding continues apace, regardless of what happens in the economy or in elections or in US versus China and so on.
You don't think it's turning around, Saurabh? I mean, the NBFC after NBFC which has come is saying that the scene for at least the good NBFC seems to be improving. We, by the way, have Indiabulls Housing Finance, so we'll be looking forward to talking to him on all of this. But R.C. Bhargava said that he believed that come August and things will start looking materially improved than what they have been the last 6 months. Do you reckon the pain will continue?
Look, I mean, who am I to contradict a legend like R.C. Bhargava? All I was saying is that the data on the ground does suggest a more prolonged challenge for the NBFC, HFC sector. So remember, a couple of years ago, I started sounding the alarm on channels such as yours that our NBFCs and HFCs were borrowing at astonishingly low rates from in the CP and CP market. Basically, they're borrowing at astonishingly low rates from the debt mutual funds. So I think we are halfway through the unraveling of that 2017 excesses. So if you sort of believe the ILFS fiasco was the starting gun for the unraveling of the fiasco, we are halfway through that. I do think we still have 6-7 more months to go. It's very rarely have I seen an NBFC crisis anywhere in the world end quite so quickly. It's, I think, a deeper challenge than that. And if you look at auto sector performance in our country over any decadal period, you'll see that the auto sector does have 5-6 tremendous years, followed by 2 to 4 far quieter years. So even for the auto sector, it's very rare for the auto sector to have a 6-month dip and suddenly come back up. I think Lehman was the only such example I can remember where, courtesy Lehman, the auto sector took a dip and recovered quickly. But this is very different, and I think this time it's going to be a little longer. The recovery will take a little longer in coming.
Okay. We constantly keep talking about where exactly are there green shoots that are expected to be the next investment destination over the next 3 to 5 years in terms of specific pockets. We've recently seen a lot of capital goods names coming up as investment play ideas, private sector banks, corporate-facing banks. Does that mix change or it stays the same according to you? Any new additions?
Well, I think what we are seeing, let's take 3 pockets of opportunity that I've been highlighting for the last 6 months or so. I think what we are seeing is much as the situation in, say, the biscuit sector or the paint sector or, say, the cigarette sector, we're seeing the monopolization of lending activity. Both banking and NBFCs, I think we'll end up with 2 to 3 good banks and 2 to 3 good NBFCs who will monopolize the sector's activity. The rest of the banks and NBFCs will gradually fall away. They simply won't have the credibility to be able to get funds at an affordable rate from either equity investors or debt investors. So in the next 3-4 years, I think we'll concentrate lending activity in the hands of, say, 3 banks and 3 NBFCs, just to simplify the concentration exercise. So obviously, if you can identify those banks and NBFCs, there's tremendous amounts of money to be made there. After all, we're talking about the world's 6th largest economy. If you can choose the 5-6 large lenders who are going to dominate lending activity in the world's 6th largest economy, that should be very lucrative. Second pocket of opportunity should be exporters. So IT's already had a tremendous run as the rupee's gone from 63 to 70. I reckon the rupee looks 76, 77 bound over the next 12 to 18 months. That should mean another spurt of opportunity for IT. And Trump's America and FDA notwithstanding, I think Indian pharma is also long overdue a recovery. So in high quality exporters, you should see a recovery. IT has already shown you the money. I think there's more money to be made in IT services over the next 12 months, but add pharma to that. And finally, given the nature of the beast, I think politicians in our country have no option but to keep supporting low-income people spending. FMCG companies have had a reasonable run over the last 12 to 18 months. And I think that should continue over the next year or so. So it's rare in India to say that tomorrow morning we will begin an economic recovery and the auto cycle will recover and the capex cycle will recover, and therefore go and buy high beta stocks and construction companies and make money. I think that seldom happens actually. That's a sort of fantasy people have from the 04 to 07 era. It hasn't worked before, it hasn't worked since. The most steady way to make money is buy high quality banks, by well-run IT services companies, by top-quality FMCG franchises, and carry along ticking your portfolio at, say, 15 to 20% per annum. I think that's good money. I'll take it any day. If I can get 15 to 20% with low volatility, India gives you that year after year.
India over the last few weeks, Saurabh, has also been pretty divergent to what markets, say for example, in US have been doing. S&P 500 has made record highs, where on the flip side, India hasn't trailed that positive momentum that we've seen in the US markets. FI activity has been missing. While obviously we made our own record highs a month ago, but that doesn't seem to have been able to remain in place. I mean, the excitement, the exuberance around 12,000 plus has just completely fizzled off.
And that's understandable, right? In the case of America, you not only have a central bank governor who from December onwards, from the day he took charge, basically has said, I will consistently accommodate the economy. If there's any sign of economic slowdown, I'll throw in the monetary stimulus as quick as I can. You could argue we too have Shaktikant Das, who's as willing as the American central bank governor to support economic growth. But the challenge we have is our financial services sector is jammed. Our PSU banks don't have enough money. Our NBFCs are by and large strapped for both equity and for funding generally. If in a developing economy your financial services sector is jammed, really you've got a challenge in the engine room. So it's understandable that in the last 6 months or so we haven't rallied as much as the S&P 500 has. I think 21st December is when the American central bank governor sort of fired the starting gun for this leg of the post-Lehman rally. And we've not been able to participate in that because our financial services sector is jammed. So I think it will take another 6 months. The good news, I think, is everybody's trying their best. From what I can see, RBI, Delhi, SEBI, everybody's trying their best to unjam the financial services sector. It's not easy, but the good news for all of us is I think the powers that be are seized of the scale of the problem and are doing what they can to remediate the issue.
Let's hope it gets done sooner rather than later. By the way, just a quick update out here on companies. So the autos have started off lower today. Motherson Sumi's 2.5% lower. Bajaj Auto, Hero MotoCorp and TVS Motors are the others which are correcting. So the auto space has not started off on a good note today. Some of the NBFCs, Piramal, Grah Finance, etc. seem to be doing okay for themselves. Saurabh, how do you go out looking for NBFCs now? I know you mentioned high quality. High quality in the financial space, HDFC, Kotak, Bajaj Finance, etc. are all trading at multi-year premiums on the price, on the valuation front. And people start talking about FY21. I met a fund manager who say, okay, I want to justify the price for Bajaj Finance. So I'll not look at FY20, I'll look at FY21. So, those conversations have already started. So my question is, would you look at those? Would you look at the second rung, which is not as expensive, but maybe a bit safer, the Axis, ICICI Banks variety? Or would you go out in the troubled space and try and figure which of the companies have weathered the storm better and bet on them because the beta could be higher?
Sure. So look, there's no question of betting. This is real people's money. This is their life savings. I've never approached the stock market like it was a casino. So let me address the question in 3 different ways. Firstly, the simplest way to think of a high quality NBFC, let's focus specifically NBFC, let's not get into banks because it becomes a more convoluted discussion then. The simplest way is firstly look for a parent with enormous financial strength. It's not viable in our country to look for standalone NBFCs where there isn't a parent with a mighty balance sheet backstopping the NBFCs. We simply don't have that. There is no track record in India of standalone NBFCs without a mighty parent being able to pull off, say, 10, 20 years of sustained performance without a heart attack. So look for a highly cash generative parent. So Bajaj, as you rightly said, fulfills that. I would say Murugappa/Chola also fulfills that. Secondly, look at the balance sheet and look for consistent evidence that the NBFC has brought down, reduced the tenor of their assets. You need to focus on NBFCs whose asset tenor has been dragged down over the last 3-4 years to say as little as 2 to 3 years. And look for evidence that the tenor on liabilities, the maturity of liabilities has been dragged out. You don't want to invest in NBFCs who are borrowing consistently in the 6-month, 12-month CP market. You would rather invest in NBFCs where the liability tenor is close to 2 years. So that you want NBFCs therefore with ALM closed, strong financial backing and track record of of consistently selecting good credits over a 10 to 15 year period. So if you look for that, yes, Bajaj and Chola passed that. I don't think the list goes too far beyond that, but that's the fundamental way of going about it. Secondly, there is no evidence at all that value investing in Indian financials, banks or NBFCs works. What there is plenty of evidence in India is if you choose high quality lenders, they might be expensive, but they're consistently giving you good returns over 10 years, over 20 years. Now, why is that? Is the third reason. Basically, if you look for a lender whose compounding slope is steep, right? Look for lenders whose compounding slope is 20, 25%. In that sort of lender, even if you buy, say, expensive, say your PE multiple is here, even then you get decent compounding. The challenge, I think, is a lot of people in India get seduced by this whole notion of value investing. They end up investing in lenders, say many of the PSU banks, whose compounding slope is very shallow, say 10% at best. With that sort of lender, even if you buy cheap, your compounding stays disappointing. It stays below the cost of capital. And I think that's the trap people need to be aware of. You can look at 20 years of data. I haven't found any evidence at all that value investing, i.e. looking for cheap PEs and turnaround situations in NBFCs and HFCs works. Look for quality, bet on quality, look for houses with strong balance sheets who are backing their NBFC subsidiaries. Look at the balance sheet, asset tenors, liability tenors, asset liability mismatch closed. I think it's very doable, and there is money to be made even today in good lenders.
Saurabh, if you were a retail investor having a fixed sum of money that you had to deploy in the current market situation, while we've spoken a lot about financials, breaking up that pool of money into investments that could yield better returns, even from stocks that have not done well up until now. So say, for example, mid caps and small caps, which have been touted as the next favorites because of the fact that they've been trailing in valuations to the large caps. Would that pool of money be dedicated towards the broader market space, or you would still stick it to the large caps?
Look, I struggle to think of this demarcation. We apply exactly the same parameters, Davina. We apply exactly the same parameters to our small and mid cap stock selection as we do to our large cap. So I can't wake up in the morning and say I'll take 100 rupees of Davina's money, through some supernormal intuition, allocate 20% of Davina's 100 rupees to small caps. Allocate the remaining 80% to large caps, say perhaps 40 to mid caps, 40 to large caps. That's just nonsense investing. If you're giving me 100 rupees to invest, I've got to be as rational about that money when I'm looking at small caps as I am at large caps. Now, it's perfectly feasible that some of my small cap investments might take longer to yield results than large caps, but not always necessarily the case. For instance, ITC is a holding in our portfolio for some while, and it hasn't had the greatest of runs over the last 3-4 years, but we are unperturbed because ITC's competitive advantage is the strength of its franchise is exactly what it was 3-4 years ago. There is no real competition to ITC, and sooner or later the government will have to relent on its stance on cigarette taxes. Similarly, there are small cap stocks in our portfolio which have done really, really well, even though their market caps are well below, say, 2 billion. Say Relaxo, for instance, has done really well for us over the last year or so, even though the market cap is below a couple of billion. So I think this notion that I will separately address small caps for you is a little artificial. Apply the same parameters that you apply to large caps, to mid caps, to small caps. And if you find companies who meet your quality filters on cash flow, on return on capital, on growth, then be as willing to buy them across the board. It might be, as you're saying, it takes a little longer for the small caps to come through, but patience in investing is one of the reasons you get paid for it. Nothing happens very quickly, but if you need to be patient with high quality small caps, so be it, such is life.
So based on those filters that you just spoke about, anything that fits the bill currently?
So as I highlighted, Relaxo is a holding in our clients' portfolios. It has been for a while, and it's the dominant player in footwear, in chappals, especially in northern India. A lot of people don't realize Bata no longer makes the Hawaii chappal. and especially in the northern and eastern Indian market, Relaxo is on its way to building almost a monopoly franchise. Family-run concern, the promoters own 60-70% of the company. Same families run the business for 30-40 years. I think this is as close to a multi-decadal compounder as I've seen. I think the installed capacity of Relaxo in footwear is 8x that of its nearest competitor, 8 times that of its nearest competitor in northern India. This gives you some sense of the scale of the company, and yet market cap is not too far above $1 billion. So I think it's around 9,000, 10,000 crores market cap. So long growth runway, well-run company. Doesn't matter what happened at the elections, what will happen at the budget, what happens in the US-China trade war. I think people in our country will need Hawaii chappals. The average price point they're selling at is around 200 rupees, so affordable mass market product. I think there's 500 million people in North India, so there's enough captive market for them to continue growing for a long time.
Well, that's some learning, Saurabh. Even I didn't know that Bata doesn't make Hawaii anymore. But thanks so much for that. And thanks so much for spending some quality time today with us and giving us your insights. Appreciate your time.
My pleasure. Thank you. Thanks a lot. Thank you.
Well, we spoke extensively with Saurabh about NBFCs. On the other side of the break, get you a large voice from that space. Liquidity surplus, says the RBI. But do housing finance companies need more cash? And Gagan Banga of Indiabulls joins you to talk about that, the NCD buyback and more. Stay tuned to Bloomberg Live.